Honorable shareholders, investors, and other stakeholders, Assalamu alaikum and good afternoon. Today is the 29th October 2025 as per Gregorian calendar and 13th Kartik 1432 as per Bengali calendar. I, Zahid Hassan, Acting Company Secretary of Bank Asia PLC, hereby welcome you all to the Earnings Disclosure Program of Bank Asia PLC for third quarter of the year 2025. This is to inform you all that the Earnings Disclosure Program of the bank has been arranged virtually through digital platform in compliance with the relevant circulars and regulations as issued by Bangladesh Securities and Exchange Commission. At the outset, I would like to introduce the distinguished executives of the bank who are present at this program. Starting from my right side of dais, we have Mr. Mohammad Mustafa Haikal Hashmi, Deputy Managing Director and Head of ICCD. Then sequentially to his right, we have Mr. Nurullah Chaudhuri, Additional Managing Director and Chief Wholesale Banking Officer. We have Mr. Sohail R.K. Hussain, Managing Director. We have Mr. A.N.M. Mahfouz, Additional Managing Director and Chief Business Officer. We have Mr. Muhammad Ibrahim Khalil, Chief Financial Officer. At this part of the program, I would like to request Dr. Muhammad Omar Faisal to recite a verse from Holy Quran.
Assalamu alaikum wa rahmatullahi wa barakatuh. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم يا أيها الذين آمنوا اتقوا الله ولتنظر نفس ما قدمت لغد واتقوا الله إن الله خبير بما تعملون ولا تكونوا كالذين نسوا الله فأنساكم أنفسكم ولا تكونوا كالذين نسوا الله فأنساهم أنفسهم أولئك هم الفاسقون لا يستوي أصحاب النار وأصحاب الجنة أصحاب الجنة هم الفائزون ইরশাদ হচ্ছে হে ঈমানদারগণ তোমরা আল্লাহকে ভয় করো প্রত্যেক ব্যক্তির এই ভেবে দেখা উচিত যে সে আগামীকালের জন্য কি নেক আমল অগ্রিম পাঠিয়েছে আর তোমরা আল্লাহকে ভয় করো তোমরা যা যা করো সে সব সম্পর্কে আল্লাহ অবহিত আর তোমরা তাদের মতো হয়ে যেও না যারা আল্লাহকে ভুলে গিয়েছে ফলে আল্লাহ তাআলাও তাদেরকে আত্মভোলা করে দিয়েছেন মূলত এরা হলো পাপাচারী জাহান্নামের অধিবাসী আর জান্নাতের অধিবাসী সমান হতে পারে না নিশ্চয়ই জান্নাতবাসীরাই সফল কাম বারাকাল্লাহু লানা ওয়া লাকুম ফিল কুরআনিল আযীম আসসালামু আলাইকুম ওয়া রাহমাতুল্লাহি ওয়া বারাকাতুহু
Thank you, Dr. Muhammad Omar Faisal. Now, I would like to request our Managing Director to say a few words about the current economic situation as well as what is happening to the banking sector and how Bank Asia is dealing with it.
Thank you, Zahid. Honorable shareholders, honorable media participants who have joined us, ladies and gentlemen, thank you all very much for taking the time to join us here. Assalamu alaikum and good afternoon to all of you. If I can share a few thoughts about the challenges which the banking sector as well as your bank, Bank Asia, has gone through and managed, in our opinion, very well. As you all know, the last few years has been challenging for the country, the economy, and especially for the banking and financial sectors. We have had problems domestically, but we have also had challenges internationally. Externally, if you look at it, we have suffered from the impact of COVID, supply chain disruptions. Following that, the conflict in Ukraine, Russia, and recently you have seen the uncertainties caused by the trade or tariff war which is besetting the world. In this period, there has been significant pressure on the country's foreign exchange reserve. We have seen in the last 3-4 years, credit growth has fallen, the capital market has become stagnant, NPL growth in the banking sector has become very high, mainly due to governance issues in past years. At the same time, we have also seen the taka depreciate significantly while inflation reached a high point of 11%. Subsequent to the past government, when there was a change of government in August 2024, there were more challenges. For a period of time, there was a period of uncertainty which resulted in a slowdown of export orders for the country, a slowdown of economic activity, impact of foreign correspondents with their limits, credit limits on banks in Bangladesh, and of course, both before and after the change of governments, we've also seen that the country rating has gone down. So all of this has had a negative impact. But following the transition, there has been significant efforts made to carry out reforms everywhere. But if I can speak for the banking sector and the economy, significant progress has been done. One of the first things for the banking sector was that we've come to know the extent of the damage caused to those 7, 8, or 10 banks, the impact of which is partially a loss of confidence by customers in general. In addition, there's been a shift in geopolitics which resulted from the tariff war, where we are seeing a major movement or change in how supply chains work. As you know, one of our main export items are RMG. They're also part of one sector's supply chain. However, due to the work done on the economy, on the reforms, we have seen that the economy has in general stabilized to some extent. We have seen that correspondent banks are now once again comfortable with the good banks in Bangladesh, and cost as well as confirmation limits are now returning to normal. In this period, it is very important that we are very prudent about our lending programs. The impact of the past 7-8 years, especially the past 4 years, on our corporate sector, on our SME sector, retail sector, has been significant, and it will take time before it can come back to fully normal. So in this period, we have seen credit growth fall to its lowest level, almost 6%. We, Bank Asia, your Bank Asia, we have been very careful in managing our loan portfolio. As one of the good banks or better governed banks, we had the luxury of depositors' confidence. We have been very careful to invest your money, depositors' money, in a way where the returns commensurate to the risk has been generally satisfactory. And we have currently one of the best liquidity ratios or AD ratios in the industry. A time when NPLs have increased to 24% of the overall country's lendings, and there are some thoughts that this could deteriorate even further. It was necessary and for us to be prudent, and we have been so. So therefore, you will see that while our loan growth has been very small, it is by strategy. We have invested elsewhere. Our deposits have grown significantly. The fact that we are a very liquid bank with a strong capital base ensured that our correspondent banks, our deposit customers, remain confident in the bank's governance, the bank's board of directors, and the management. You will see from the presentation that our non-performing loan figures have risen. There is a reason for that. We have taken the opportunity of the changes which happened last year to engage with our customers so that we can address the root causes of the company's or the customer's issues. Sometimes these are due to losses. Sometimes these are due to mismatch of funds. Sometimes these are due to other reasons. However, we have engaged with our customers who have been affected by events or by their decisions so that these companies can sustain themselves and become commercially viable. As part of that process, as well as central bank's changes in classification regulations, our NPL has risen. We'll see that in the presentation by our CFO. However, I wish to assure our shareholders, our depositors, and our partners elsewhere that the majority of the NPLs are fully covered by provision. Almost 90% of the NPLs are covered by provision, and the balance amount are covered by twice the amount of collateral. So we are we are in a significantly strong position by the quality of our balance sheet. I want to emphasize that with a high liquidity and a strong capital base, and also the fact that we have concentrated or focused on book cleaning and enhancing the quality of our loan portfolio, means that now that the economy has significantly stabilized, we are in a very strong position to grow our books in a number of directions. We will be focusing on not only corporate, but also on SME, retail, offshore banking, cards, agent banking, and most importantly, we'll briefly hear some of our plans regarding digital initiatives. So with that, I would like to once again thank you for joining us. Our CFO has a presentation for you, which will briefly show you that even during this challenging time, your bank has performed well, and we are in a very strong position to take this bank forward. I thank you for your time.
Thank you, Mr. Managing Director. Now I'm going to request the Chief Financial Officer to present the earnings disclosure quarter 3 of 2025 of Bank Asia PLC.
Ladies and gentlemen, Assalamu alaikum and good afternoon. Thank you for joining this Q3 earnings disclosure. Today, I'll present a quick review of our Q3 financial performance and outlook. Our detailed financial statement is available on our websites. So, before I begin, let me remind everyone that this presentation may contain forward-looking statements. This reflects our management current expectation about future events and performance, which are subject to risk and uncertainties. However, the bank management remain committed to transparency and integrity in financial reporting and will continue to share timely insight into our business outlook. Let's first look at the broader economic landscape. So, despite global and domestic challenges, Bangladesh economy remains resilient with GDP growth projected around 5%. And this will continue upward in coming years also. And our approaching that GDP landmark $500 billion in coming years. So that is a great milestone for the country. So if we see the inflation and interest rate, then we'll see that inflation has started to ease down to 8%, which was almost 11% in last 1 and 2 years ago. So this reflection also shown in overall interest rate of Treasury bill bond as well as lending rate reduction. And declining trend of this lending rate will help to reduce production cost and will increase private sector credit growth in upcoming years. On external factors, if we see that a strong rebound of remittance, almost 21% growth over last years, and 12% growth of exports. These two things contributed a positive current account balances. And our FX reserve now stand almost 32 billion, which is 26% year-on-year growth over last years. But if we see the private sector credit growth is very low and dropped to 6.4%, which is lowest in over 2 decades. So this private sector credit negative, very low growth also reflected in our balance sheet also, and when we will see our balance sheet, we will also share the our position and private sector credit growth position. Then the country's industry NPL ratio triggered to above 20%. So actually this happened mainly driven by the Bangladesh Bank initiatives to promote greater transparency and good governance in financial reporting in alignment with international standards against the backdrop of severe financial scam in some banks and the previous regime. So against this backdrop, Bank Asia has continued to deliver stable and consistent performance. Credit rating, Bank Asia has been maintaining the top tier credit rating, that is AA1 and ST1. So this top tier credit rating reflect our strong repayment capacity along with lower credit risk. So this gives the confidence to all of our deposit holder and investors. Our digital footprint is expanding rapidly across all customer segments. Digital initiatives continue to expand through Nano Loan, HL and Smart Apps. It helps continuous support to financial inclusion and operational efficiency. You will be happy that your bank have awarded lot of awards. Recently we have achieved the WSBI SDG award. This reflects our contribution to innovation and inclusion, advancing inclusive banking, driving economic empowerment, accelerating digital innovation. We are also awarded overall winner for best presented annual report by ICAB as well as SAFA, South Asian Federation of Accountants. So now the financial performance. I already mentioned that our detailed financial is available in our website. The major key figure of financial is profit after tax. So if you see our performance in Q3, net profit after tax significantly grown by 71% over last year. This year, this 9-month PAT reached to 351 crore BDT, which was BDT 205 crore in last year. So if we see the reason behind the 71% profit growth, it mainly driven by the strong investment income, better cost efficiency, and efficient tax management. We see our operating profit increase 4%, total revenue increase 17%, and 97% growth of investment income. This investment income actually help us to produce net PAT 71% growth in this 9 months. In deposit parameter, we see that in last year, we have almost 12% deposit growth over last September. And our deposit mix is very good mix of deposit, that 45%, almost 45% deposit is low cost and no cost deposit. So this is a very standard ratio and good ratio among the private sector banks. And we give you, and we ensure that this ratio will continue, that will help the bank to earn more profitability and reduce cost. In loan and advances, as I mentioned earlier, private sector credit growth is at its lowest in 2 decades, and we can see that impact in our balance sheet as well. We also remain cautious in lending under the current industry scenario, but we invested our surplus fund in government securities to ensure healthy and secure return. Going forward, the bank is focusing more on small and medium and retail segment, aiming to increase this portfolio to 50% from existing 25% to our total portfolio within next 3 years. Our non-funded business also moved in line with the country's export and remittances is positive over last year, and import is negative due to overall the current economic situation. If we see some major selected ratio for a bank, that is yield, we maintain a very stable yield above 10%. Our cost of funds increased mainly last year's upward interest rate, but we are maintaining spread above 4%. If we see now another key important ratio, cost income ratio, this is one of the beauty of our balance sheet is cost income ratio, which is only 36.80%, and which was 45% in last 2023. I believe this is one of the lowest in the banking industry, and as such our cost of operation is also in declining trend. But the CL, our CL ratio, which was 12.98 in last September and 11.40 in last December, this increased to 14.86%. So mainly a lot of things for this reason, but some Bangladesh Bank, you know that Bangladesh Bank have withdrawn some policy support during the pandemic and slow recovery, as well financial crisis of large group of companies. Besides, now central bank DPD calculation or classification calculation, which earlier was not in line with international framework, from this year, central bank started this loan classification in line with the international framework. That is one of the reasons to increase NPL in our portfolio as well as the country's portfolio. But in the below graph, you see that there is a good thing that if you see total provision against bad and loss classified loan, like in September 2025, our total bad and loss is 4,259 crore, where the loan loss provision is 3,680 crore. So it is almost 87% covered. So if we say that our total NPL is covered, 87% of total NPL is covered by the loan loss provision, and the rest of the amount is fully covered by the collateral securities. Actually, the additional collateral is more than the rest of the gap amount. So it indicates that major shocks of NPL bank have already covered. Going forward, if we see the EPS, earning per share already 79% grow over last year, and market share now is running 18, which December was 17, as market is still unstable, capital market. But good thing is that NAV, net asset value per share. So investor net asset value per share 21% growth over last year. That means in September 2024, NAV for every share was 24 taka. Now it's 29.28, almost 21%. So it's indicate that the management and board actually increase the share value in last year. So return on asset and return on equity, it also increased. In this 9-month, return on asset is 0.83%, which was 0.55%. And return on equity also increased almost 13.51% in this 9 months. Then Bank Asia maintaining very strong capital base. From last year, we have increased 13% of our total capital base. Now capital base is 4,300 crore, and the capital adequacy ratio is almost 15%. And our AD ratio is 57%. LCR and NSFR ratio is very good against the requirement. This actually indicate bank's liquidity position also favorable to support robust growth in business. So in conclusion, despite macroeconomic challenges, Bank Asia PLC continued to perform with strength, stability and resilience. We remain committed to sustainable profitability, digital innovation and inclusive growth aligned with our purpose of evolving together, transform, unite and thrive. Thank you for your kind attention.
Thank you, Mr. Chief Financial Officer. Now, I would like to request our Managing Director to summarize Bank Asia's performance in light of current scenario.
Dear shareholders, honorable shareholders, ladies and gentlemen, if I can summarize what our CFO has presented, your bank, Bank Asia, is in a very strong position to take advantage of what we feel a coming strong economic revival of the country. As you can see, we have cleaned up most of our marginal loans. Once this is done, we will be in an extremely strong position to lend to other customers, be it corporate, be it SME, be it retail or others. We are in a position to offer very strong bundled packages as well as lower rates of interest. We will be in a very strong position by investing in technology to make our operations even more efficient. The fact that our cost of operation has so significantly in percentage terms reduced will help us to maintain our spread while offering very competitive rates to our customers. So going forward, considering that in this difficult time, we have strengthened our balance sheet, we have made provision for most of our marginal accounts, and I would like to state that we believe many of these accounts will eventually become UC again with the proper support from the business community, from the entrepreneurs, as well as from the bank. And I assure you, we are engaging with our customers so that these companies once again becomes viable. From a balance sheet point of view, from our growth plans in retail, SME, cards, from our initiatives in digital banking, and from our focus on high quality corporate, as well as our plans in future to expand our operations abroad. In remittances, we have been very successful in ensuring a stable flow of remittances coming to Bank Asia. During the last 3-4 years, difficult periods when the reserves were going down, Bank Asia has always had a positive NOP. In foreign exchange, your bank stands among the top banks in terms of supporting our customers. So the future looks good for us. We see a lot of positives. We see that the reforms which are happening will be good for the industry so that what happened in the past does not happen again. Our chairman and board of directors, as well as your management, are extremely focused on compliance and governance. And in the future, you will see specific steps which the bank will take so that our efforts in this are reflected not only in the domestic market, but internationally as well. I would like to say that the second part of our journey has just begun. The only ratio which has exceeded satisfactory levels is NPLs. And as our CFO has mentioned, most of it has been provided for. Last year, at a gross level in 2024, we have provided almost 1,100 crores. This year, in 9 months, we have provided almost 900 crores. And yet, our profit after tax in 9 months in 2025 has grown by 71%. So we have covered our marginal loans and yet ensured what we hope is a satisfactory level of return for you. In this, I would like to thank our chairman, Mr. Romo Rauf Chaudhry, vice chairman, Ms. Zakia Rauf Chaudhry, Mr. Rumi A. Hussain, chairman of our EC committee, Ms. Rumana Rauf Chaudhry, our director, Ms. Farhana Haq, director, Mr. Enam Chaudhry, director, Mr. Baki Kholili, independent director and chairman of the Risk Management Committee and Audit Committee, Mr. Abul Kashem, independent director, Mr. Nafiz Khandokar, director, Mr. Sabit Naim Chaudhry, director, Ms. Farzana Khan, independent director, Mr. MD Atar Rahman, NDC, independent director. As you will see, in Bank Asia, we have a significant number of highly qualified independent directors who, along with our sponsor directors, ensures a high level of governance. I believe we, the management of Bank Asia, believe that we have reached a point where we are ready to take off for much greater results. In this regard, I must recognize the contribution of our original former chairmans, late Mr. A. Rauf Chaudhry, Mr. Anisur Rahman Sinha, Mr. M. Saidu Zaman, and other directors who may not be present in the board today, but all their contribution has led to this moment. I would like to thank you. My two colleagues, Additional Managing Director, Mr. Mahfouz, and Mr. Nurullah will speak a little bit more on some of our initiatives. So I thank you all for your time, for joining us. I request your support. I am confident that we can deliver your expectations and the dream and vision of our chairman and board that we be one of the best banks in the country. We are uniquely positioned for that. Thank you.
Managing Director. Now, I would like to request Mr. A.N.M. Mahfouz, Additional Managing Director and Chief Business Officer, to share his overview on the bank's future plan regarding retail, SME, cards, and agent banking operations, along with digital initiatives in these areas.
Thank you, Zahid. Assalamu alaikum and good afternoon to everyone. We have gone through the detailed presentation from our CFO. From my side, I would like to take you through few of the initiatives or few of the upcoming initiatives that we are going to undertake with regards to retail and SME banking. First of all, the major initiative or major directive that we are going to drive is to diversify our portfolio. What does that mean? That means the current ratio of retail and SME versus corporate is close to 24% and 76%. Our vision or our strategy is to take that ratio to a 50-50%, which means that retail and SME and cards business along with agent banking business has to grow a significantly higher pace than the corporate business grows. That does not anyway mean we are not going to grow our corporate portfolio. We will definitely grow our corporate portfolio, but our retail and SME portfolio would be growing significantly at a significantly higher pace. As a part of that strategy, we have introduced zonal concept in our branch network for better monitoring and quicker support to ensure branches perform better. We are introducing in Q3 our priority banking proposition to ensure best-in-class services for our high net worth clients. We are going to introduce payroll banking, dealer financing model, QR code payment, dual currency debit card, corporate internet banking, among other host of value-added services. We are creating dedicated sales channels for both retail and SME to increase our new customer onboarding significantly. At the same time, we are revamping our branches and contact center with additional and trained resources to provide better and superior services to our valued customers. We are constantly introducing process automation and centralization activities to ensure faster turnaround time, accuracy, and increased efficiency. We are strengthening our collection and recovery infrastructure and equip them with digital and modern tools to control the delinquent portfolio better and bring down the NPL ratio to a significant low. We are significantly expanding our branches, sub-branch network, and our agent banking network, and also our Islamic banking reach. Currently, we have 5 Islamic banking windows, and we have already got approval to open up 10 new Islamic banking windows, which are under process. And by the end of this year, we will be able to provide service through these 15 Islamic banking windows to our Sharia-based clients. In terms of branch expansion, you'd be happy to know that Bank Asia is the only local bank which has the experience of acquiring 2 multinational banks in the past, and we are in the process of acquiring another, as by this time you all have known that we are going to acquire the Bangladesh operation of Bank Al Falah. We are almost at the final stage of closing that deal. We are proud to inform you that we have significantly increased our remittance inflow, as our managing directors have just mentioned, from 2 of our exchange houses based out of USA and UK. We are delighted to inform you that from USA, we have crossed $100 million in remittance, where in 2025 up to third quarter, to be precise, it was 95 million. We have just crossed 100 million this month, compared to that of only 36 million back in 2020. Further, we are actively working to expand our operation in USA to cover the areas with high density of Bangladeshi diaspora. On the UK exchange, we have just received approval from our honorable regulators to expand our operation through Asian banking network in UK, which will significantly increase the opportunity to increase our remittance flow from UK. As you know, we have the highest number of agent networks, including micro merchants, spread across the country. We have a plan to take the agent banking touchpoint to a greater height through digital innovation, tie-ups with telcos and other significant players in the market. At the same time, we are also going to introduce multiple innovative and technologically advanced solutions through our agent banking network to the market to significantly increase our financial inclusion agenda, mainly to cater the unbanked and underbanked population. On the performance side, we have introduced individual KPI for our frontline performers and the performance improvement plan process to convert the bank into a performance-driven organization. That's all from me. Thank you.
Thank you, Mr. Additional Managing Director. Now, I would like to request Mr. Nurullah Chaudhuri, Additional Managing Director and Chief Wholesale Banking Officer, to share his overview on corporate banking focus areas, new initiatives, treasury, offsite banking, trade, etc.
Thank you, Zahid. Thanks all the shareholders who are participating in this event, and also the media partners and all the colleagues who are present here. Actually, the MD and CFO all are mentioning about the NPLs and provisionings of the Bank Asia as well as the country situation. Corporate banking in this take, what they will do in coming years. First thing I have to highlight, corporate banking, first thing we diversify our sector, which is like we're gonna diversify the export, constructions, cement industries, pharmaceuticals, and other than the garments who are manufacture other products. This thing, first thing we have to do, and to do that, what we have done in Bank Asia this year, we have centralized the corporate departments, and also we centralized the trade department, which was actually done by the branches earlier. So based on these two centralization, I believe the incoming years corporate and the trade, as well as the credit admin, I forgot to mention, we have centralized the credit admin. So these lapses of due to decentralized, these lapses will be stopped, and our strong monitoring will be done by the trade, as well as the corporate monitoring, as well as the documentation team. So these 3 steps we have taken this year, and I believe next year, these steps will give the fruits in coming days, so the NPL will be much, much, much lower. And I would believe that for next 3 years, our NPL we are going to targeting is less than 1% in corporate department. So based on that, I like to mention another thing in corporate and the trade on the digital journey. That is that we're going to focus on the digitization of the trade department, where we can get the better customer experience, where customer can do their LCs, do their trade business from their office and with their own check and balances. And on corporate side, digitization, I'm gonna start the journey on next year, which will be help for the corporate customer to monitor their limits, to ask what they want, and as well as the RN to inspect as and when required the factory and inspection the stocks on a regular basis. So the strengthening the monitoring and as well as the trade, I think, and documentation, I think the Bank Asia will go to the next step which we couldn't do it in last years, but from now on, I believe we will do it in coming days. And I would another thing emphasize that, like our MD mentioned, that the tariff thing and all the thing. So the positive note that if the tariff things comes better, we're going to focus more on export. So why export? Because the thing is that if we can get the more foreign currency inflows, our standard of dollars will be much better. And likewise, he mentioned that import, you have seen the slide, the import is down and the export growth is 15% in this year till September. And this actually lead our Treasury Department to invest more on other places on this excess dollar. And also the Treasury Department, this liquidity, they have invested in other sectors, in the government sectors, and where we earn much more profit on that. And in short, I would say that these three things you have to note, that one is diversification of portfolio, two is digitization, and four is the centralization process. These three steps will lead this Bank Asia to the next level in the corporate trade business sector. I thank you all for the joining with us today. Thank you.
Thank you, Mr. Additional Managing Director. We will now proceed to the question and answer session, where we will provide answers and clarifications to the relevant questions and comments on the third quarter financial performance received through digital platforms and electronic media. In this regard, I would like to thank the honorable shareholders, investors, and other stakeholders for their valuable comments, observations, and questions. Now, I'm going to read out the pertinent questions and observations one by one, which the Managing Director would answer accordingly. First question, total operating profit during the period, that is January to September 2025, grew by only Taka 45 crore or 4% from last year, whereas profit after tax, that is net profit, increased by Taka 146 crore or 71%. What is the main reason for this?
Thank you for your question. It's a combination of factors. Number one factor is that we brought our cost to income ratio down from 46% to 35%. This is one of the lowest cost to income ratio in the industry. Next, we grew our deposits, but we were very prudent about lending, at least during the last 14 months. Instead, we have invested carefully in foreign currency transactions, government bonds, prudent customer lendings, whereby we have replaced some customers with others. We have also increased our wallet share in corporate customers. During this time, we have also taken the opportunity to review our internal processes so that we become more efficient. We have reduced bureaucracy. We have expanded automation. So we are doing more with less. A combination of all of this has allowed us to provide for nearly, in the last 2 years, which is this 9 months and the previous 12 months, almost 1,900 crores as provision, while at the same time, our profit after tax has grown very significantly. And one other aspect for the large growth in profit after tax is we've been very good in managing our tax liability. Obviously, we have been extremely compliant, but we have invested in products like, for example, in foreign exchange or in treasury bonds. Mark-to-market gains have a lower rate of tax. So prudent investments and managing our tax has also contributed to this. Thank you.
Second question, what is the reason for almost taka 100 crore lower corporate tax charging in current year during January to September 2025, despite growth in profit compared to last year?
I'll ask our CFO to respond to this question.
Thank you, Honorable Investor, to raise this question. Actually, some combination of some major issues help us to book or keep lower tax than last year. This is actually, we take the benefit of capital gains, tax benefit from write-off loan, and very good amount of previous year tax savings we adjust this year. So as such, with combination of this, though we earn higher profit than last year, but we maintain lower tax than last year. Thank you.
Third question, what is the bank's capital position, adequacy, that is Tier 1, total capital ratios, and has it been impacted by increased provisioning or risk-weighted asset growth? Is there any indication of capital pressure or need for external capital raise?
We already presented that we have kept huge amount of provision over last year, but side by side, we bank board and bank management always focus on to keep good amount of capital adequacy ratio. And after almost 1,000 loan loss provision, we are maintaining capital adequacy almost 15%. And beside the capital, raising capital, we are under process of raising 400 crore sub-debt Tier 2 capital. Out of that, you'll be happy to know that almost 390 we raised, and the rest of the 10 within very short time, we will complete the raising the full amount 400 crore. And going forward, when we see that the private sector credit growth will be increased in the next years, so accordingly, we have some plan of capital regarding capital planning, and we will increase and implement this planning to keep always capital adequacy 15% above.
Fourth question, what are the key strategic moves the bank is considering in the upcoming days, given the raising interest rate environment, slow private sector credit growth, and stiff competition among peer banks?
If I can answer that. Thank you, Honorable Shareholder. First of all, I would like to say that we see definite indications of the economy stabilizing. Foreign exchange reserve is now in excess of $30 billion, even as per IMF calculation. While credit growth has fallen, but we see signs of increased import activity. So last month we saw higher than in the last 10 months average worth of imports. That's an indication that economic activity, domestic economic activity is rising. We have seen that the government has, interim government has carried out a successful negotiation on the tariff issue, which places our RMG and other exporters to the US in a competitive situation vis-a-vis our competitors. We need to expand, we need to leverage this advantage. It's a small advantage, but we need to leverage by diversifying our export base. With more stability, we expect to see more foreign direct investment. There are interest happening, and we can see more interest for investments in our EPZs. So these are indications that banks who are well structured will find good customers. As mentioned earlier, we will significantly, I would use the word even radically, expand our SME, especially as retail portfolio. We will leverage our high surplus liquidity as well as digital solutions, which we're working on and which will be among the leading solutions in the market. So we are confident that a combination of these and strategic partners will help us. As some of you may know, recently we have reached a transaction, we have completed a transaction with the International Finance Corporation, where we borrowed $35 million to help finance our SME portfolio. There are more things which we are working on with international organizations like IFC, ADB, and others. So I'm confident that you will see a great deal of progress, not only in our TACA business, but as well as our foreign currency business, our offshore banking business. Thank you.
Fifth question. What initiatives the bank is undertaking to make corporate versus retail SME loan mix 50-50 from its existing 77-23 ratio in order to diversify the loan portfolio and reduce concentration risk? Does the bank have any specific action plan in the near future?
From retail expansion perspective, we can mention that we are expanding our branches network. We are expanding our agent banking network. At the same time, we are also introducing sales channel for S particularly, with significant concentration of opportune areas. At the same time, to mitigate the risk, we are strengthening our collection and recovery team and we are going to equip them with modern tools like auto dialers, telecallers, technologically advanced data analytics, so that they can understand the delinquency way earlier than it actually happens. So from that perspective, the sourcing channel will be significantly increased, and our approval and the back-end processing will be digitized, and we will rely on automation to get faster and quicker approvals. So I think if we significantly increase our sales force, increase our branch touch points and agent banking touch points, introduce new products and services with digital solutions, our onboarding numbers will go significantly high from retail and SME perspective. And from corporate, I think Nurullah bhai some points.
Thank you. On the corporate side, I would say that growth will be there, like retail, not in the pace on that because of the country. If we see that great growth is growing, the corporate will go eventually. But the thing is that not at the pace of the individual or the mass, but it will be a very selective basis client, choice client, and we're gonna be very cautious about when we're gonna assess the credit, we're going to be more cautious on giving the corporate loans because these are the huge number of tickets. So if one loan goes bad, the entire profitability got affected. So we will be more cautious on the monitoring side and the loan disbursement and credit side. So the growth is not going to be like significantly like retail or SME. Thank you. And also we're going to focus on the structure finance where we can help the big corporates to get the syndicated loans and where the monitoring those syndicated, and we will be successful on those if the project and the country demands on that structured loans is there. Thank you.
Sixth question. Bank Asia is a stable bank for a long time, but its balance sheet figures, especially deposit and advance, are not growing compared to peer banks. What are the key reasons for that?
Thank you, sir, for your question. I would say that when we do surveys about Bank Asia, our acceptability to our customers, we find a very high level of loyalty, a very strong belief that this is a well-governed bank. I think for us to move to the next level, the things which we need to do, invest in technology, invest in our people, training, get skill sets which may not be presently in the bank, or train our people with those skill sets. We are already in the process of doing all of that. We have done that for the past 14 months. And I am confident with our strong balance sheet, with our emphasis on governance, and as I've mentioned earlier, you will see real steps which our customers, our partners, our stakeholders will be able to see those steps and recognize that Bank Asia is a very strong, well-managed, well-governed bank. We intend very quickly to actually get Bank Asia rated by the end of next year. So that is one thing which I can share with you. I believe with all of this and with the reforms which the government and the central bank in our sector are introducing, with the work being done in the capital market as well, we are in a unique and extremely strong position. Our loan book will be mostly clean by next year. That puts us in a very strong position when the industry NPL ratio is around 24%. Our ratio is 14% today, but you will see a significant reduction very soon. Thank you.
Seventh question. As agent banking is a key strength of Bank Asia, what strategic steps or future plans should the bank undertake for further strengthen and expand this segment?
Thank you. As you know, when it comes to agent banking, Bank Asia is the pioneer bank. We have the largest footprint of agents as well as micro agents. We are going on a very steep, very large expansion of our network. We will be adding more digital solutions. We will be expanding the number of products which our agents can sell. If you will notice, as you may already know, agencies or our agents are in a form, a type of SME business themselves. And we want to emphasize this, train them, expand their skill sets so that they can do more things than just agent banking. Believe that we can very rapidly, very significantly increase agent banking, tie up with other related or congruent partners who together can help us to provide more services and also significantly increase the number of touch points. Thank you.
Thank you, Mr. Managing Director. By answering this question, our question and answer part is concluded. Now, I would like to request our Managing Director to deliver the closing speech of this earnings disclosure program of Bank Asia PLC for the third quarter of the year 2025. Thank you.
Thank you, Zahid, our acting company secretary. Once again, I thank our chairman, our board of directors. I would especially like to thank our shareholders for their steadfast support. I would like to reiterate our position, our statement, that we are in a very strong and unique position to take this bank to the next level. Everything you have heard today shows almost all the ratios going in positive direction. We have the surplus liquidity. We have the capital. We are doing things to enhance our capital base. Enhance capital base with quality solutions. We are working on digital solutions so that we can deliver our products to the customer in a very short time. We are automating much of our processes so that productivity significantly increases. The fact that our cost to income ratio is now at an industry best of 35% of income is an indication of that. So Bank Asia is in a unique position. We hope for your support with the guidance of our chairman and the highly skilled professionals and sponsor directors, and especially a team, a management team and staff I'm extremely proud to work with. I'm very confident we can meet your vision, dreams for this bank. So thank you very much for joining us today, for your valuable time. We will keep your faith. Thank you.